Hello and welcome back. Now, our next guest is the co-founder and CMO of Sarwa. This is the first and the fastest growing automated investment advisory platform for young professionals, investment professionals here in the region. She co-founded Sarwa, indeed, after many years of consultancy in the retail sector and looking at strategy and marketing, and she has a track record of project delivered from clients ranging from government entities to multinationals, so a lady who really knows what's going on. So a big warm welcome for the co-founder and the CMO of Sarwa. Nadine Mezher joins me now. Nadine, great to see you. Thank you.
Thank you so much, Etna. Thank you for the introduction.
Nadine, when we look at investment banking, and I mean, if there is a way to make it more democratic, so to speak, and more inclusive, I believe you've done it. And this is what Sarwa really wants to do. Talk to us a little bit about that in terms of making it more accessible for more people.
Absolutely. I mean, as you mentioned, Sarwa, in summary, is a financial app. So it's a personal finance app. What we wanted to do is really help people build their wealth through smart investing. Now, when we built Sarwa, and that was around 3 years ago, it was really to answer a need in the market because we saw that there was a need to disrupt the existing financial services in the region. The reality is it wasn't giving equal access to everyone when it comes to financial tools for investing specifically. So what we noticed is that the majority of people either didn't know that they need to invest or didn't really understand how to use the tools. And that's why Sarwa was born. We wanted to bring something that's very affordable. So it's very low cost. It's one inclusive management fee and very accessible. So full online onboarding. Very easy to use. We don't use jargon that's typical of the investment industry. So we tried to make it as simple as possible because we wanted to bring that solution to everyone that's interested in building for a better future, whether they're young or they're savvy investors. So it was really regardless of their net worth, their age, what their goals were. Ultimately, that's really what is driving the team at Sarwa.
When we look at the word disruption, I think in the market, I mean, these are markets in many ways, that probably needed to be disrupted and woke up a little bit and more opportunities actually delivered out there. Talk to us perhaps about future trends and predictions in the SME and, the startup segments as well. What do you see happening in the region in terms of the dynamics of this part of the industry?
It's a very broad region, right? But I do believe that business ownership in general has been really the backbone of the economy in the region. Now we're seeing more and more youth coming back into entrepreneurship. And I believe this is driven by different reasons and causes. One is the very high digital connectivity of the younger generation, but also a lot of involvement from the public sector. So we see a lot of governments being involved. There's a very big top-down approach to how do we build a vibrant ecosystem. And we've seen it really here in the UAE, and it's something that's happening across, but the reality is the region is very different when it comes to the maturity of the systems that are behind it. However, that said, if you look into 2020 alone, we had around $1 billion in terms of funding coming into startups in the MENA region. And that's been, again, driven by, as I said, a younger population that's really looking to change the status quo. Now, to answer, I believe your question on trends, it's a very big topic. Etna, I'll try to very quickly maybe give my opinion about it, but I do believe we're going to see some of the traditional tech. There's going to be a lot of focus on tech, clearly. Some of the traditional tech, like e-commerce, is going to take a back seat. We're going to see maybe last mile logistic companies coming more in. There's going to be focus potentially on fintech, edutech, health tech, and agri-tech. So a lot of the technology that can add value to the economy. And what we've been seeing recently from a funding perspective is it's been really led by regional VCs and government funds. We're seeing more and more interest from international VCs coming into the region because they are seeing the opportunity. Now, for traditional businesses that are not digitizing as fast as needed, unfortunately, we might see these SMEs disappearing while opening opportunities for others. There's a lot of different changes happening.
Indeed. I mean, interesting you say there are some businesses who are not digitizing as fast as they need to be. I mean, is that the only way that's what has to happen? I often sort of joke about, digitalization is not the disruption, it's not the distraction, it's the destination in so many ways.
Yeah, absolutely. Absolutely. I mean, with the pandemics and everything happening, the reality is the pandemic brought this completely new characteristics to business approaches. It changed the economic landscape, the competitive landscape, the business model, everything, including the business practices, but also consumer behavior. So if you're not adapting as fast and you're not being as agile and as relevant to your customers, then you unfortunately become irrelevant. We always say that in today's world, it's not about meeting expectations of the consumers, it's about always exceeding them. So this is really what happened recently, is an acceleration of the pace of digitization, and to kind of meet the consumer behavior, so the shift in consumer behavior, but also in terms of spending trends that we're seeing and in terms of doing businesses. So the reality is even the supply chain is being disrupted. So everything that you do, if you want to be a sustainable model, you have to be on top of everything that's digital and be adaptive very quickly.
Yes, indeed. And as you say, too, staying relevant. Ultimately, if you're not relevant, there's no need for you. And we all know what happens to companies, when that demand is not there. Now, you mentioned VCs there and, the venture capital market. And obviously, Fintech, this is having a lot of focus here, a lot of attention right across the region. Why are so many investors really interested in this? I mean, we talked there about, the concept of shifting and being relevant. But what has been the big change, I suppose, in the last 5 years or so?
I do see more and more VCs being interested in that specific vertical. And the reality is the MENA region has one of the world's most unbanked population, but at the same time, it has a very high mobile penetration. So combine the two and the fact that you have around 40% that's still unbanked. When you combine all these variables, yes, it might present a challenge, but it also gives a lot of opportunities to simplify the scope of the financial services. And when we talk about simplifying the scope, ultimately it's about really presenting new ways of doing business and of reaching consumers and disrupting the old traditional ways, because that's where the world is moving, and it's highly needed in the region. Specifically when you have this, as we mentioned before, an expanding younger generation that has a massive potential and at the same time has a lot of frustration in terms of dealing with the traditional institutions. Efna, I don't know if you were aware, but a few years back, and I believe we're working towards changing that, and we're going in the right path, but the region had one of the most expensive financial services in the world. And we see it, through Sarwa. We, as you mentioned, we're a wealth management platform. So the reality is when we started looking into launching, we looked into the average prices, and here it would average out around 4 to 5% in terms of the cost for wealth advice, right? When in developed countries, you would have around 1% is the norm. And that's something that we tackle through Fintech. And that's why VCs are interested in the region and in this specific vertical.
Yes, and I suppose the potential that is there and the fact that things will change. But I didn't realize it was, I think that expensive, but the fact that it is going to change, and I think it will, without a doubt, it has to. Now, you mentioned some of those there, presented maybe a few of the challenges, a few of the roadblocks there, but how has your company particularly, overcome the challenges that you were presented with when you got started?
I think in general, like across businesses, we face the same challenges in terms of conducting and launching new businesses. But one of them is really about market reach and educating the market when you're presenting them with something that's new. What we've seen is the culture had a certain taboo around discussing money subjects. And this is part of the culture here is we don't talk necessarily about money. We're not taught about money, whether in schools, universities. We come more from a spending culture, and hopefully that's changing, not from a saving culture. Whenever we save, we tend to put it in one asset, which is real estate. So that's something we wanted to tackle heads on, because we decided that one thing that was lacking is access to information. So, and that's something we heard a lot about. Why don't you start investing? Is I don't know enough. It sounds too complicated. So we made it very simple. We don't use jargon. Every information is available on the website. We do a lot of education. We do a lot of content development. So again, how do you reach your audience? You look where they are. You see them. They're on social media. So let's say, for example. So you go and you try to make sure they understand the importance of investing. Another thing that we heard a lot is, I don't have enough money. And that's why we, again, came in with a very low account minimum. So I'm going to mention the same message, which is listen to the market. What are the pain points and how can you really address them? So our account right now is $500. That's the minimum. And we are, in a few weeks, we're actually bringing it even lower than that because we want to reach as many people as possible. The final point is really the fact that they didn't know when to start. So that's, again, something very, very wealth management related, which is about just start now. The best time to start investing is starting to invest now.
And again, what you say there too is it's very much about, re-educating a lot of people here in terms of, or just starting to educate because they don't have that sort of background, they don't have that knowledge. And of course, unbanked population, it's a lot of people. I guess when we look at, the growth of small business and the fact that VAT is in place as well, this has actually, I suppose, streamlined business a little bit, and the grey economy, so to speak, has been, we're not quite rid of it. But do you see a shift in terms of what's been changing here? And when you look at fintech, where do you see your predictions for the fintech industry in the Middle East, Africa region?
It's a very, very good point. The reality is, as we mentioned, there are a lot of opportunities, and it's across the sectors, right? When it comes to financial technology specifically, we can look into the value chain or the supply chain, and at every point, there is opportunity for improvement, whether it's payment, remittance, whether it's wealth tech, again, what Sarwa does, whether it's rec tech, and many other forms. So insurtech, crowdfunding, compliance. So in general, we do see a lot of places where financial technology can help support that change and better the services. The way I see it evolving is we will continue seeing these gaps being filled by startups as long as regulators keep the field open for them, and as long as the public and private sector work closely together to make sure that, ultimately you're balancing between client protection, data protection, but also the ability of not to inhibit any innovation and moving forward with all these changes.
Now, you talked there about the low entry fee, so to speak. I mean, it is an amount that a lot of people can actually be able to manage when they think about investment and when they think about looking. But within, your platform too, is there, I don't want to say the idiot's guide, but is there a sort of a step-by-step process in terms of the new investor coming in and how can they navigate that platform?
Yeah, absolutely. User experience is extremely important. And how do you actually bridge between, the interface and the experience itself? And how do you make people go through the platform without having to have your sales agent sitting in front of them and telling them, this is why you need to do. So you have to make it very intuitive. You have to make it very simple. You have to speak the language. So as much as we can, we make it very conversational. And we have, ABC steps. So once you actually log in and once you go to the website, you register, we have a series of questions, which is we call it our survey. It's our KYCing and the way we understand, your knowledge of the market. How do you, what are your financial goals? What are you looking to achieve? So on and so forth. And after that, we recommend the portfolio. So everything around building a sustainable business today revolves around being customer centric, and how do you make sure that your client is able to use the platform without a lot of back and forth.
Now, when we look back on the last year, it's been a tough year for so many people, and it's been a particularly tough year for smaller entrepreneurs. I mean, how can they actually adopt a growth mindset, and I suppose take those risks to come back into the market. Certainly people, will definitely hope what we've seen in the last, year and a half, we're not going to see it again for a long time. But it's still, I think it might have made people rather nervous when we look at entering a market as an entrepreneur at a time like this.
So I would say it's about healthy unit economics in any business, specifically, especially today more than ever because of what the pandemic brought. So a lot of maybe SMEs didn't survive. Those who survived the pandemic managed to do so because they were smart about their cash flows. They were smart about how to adapt, how to shift. If I was to draw on a personal experience, my husband was launching his startup when the pandemic hit, and it was a SaaS for transport optimization, public transport. And clearly with the pandemic, that didn't happen. So he had to shift within a week. And what he realized is that delivery is going to boom. So he completely shifted to something that's about last mile logistics. Now, in general, this is what businesses need to do. I truly believe in that because we went through it as Sarwa, is to adapt operation, is to make sure that they're becoming more digital, regardless of what industry they operate in, because you need to automate these processes in order to survive any, new characteristic in this new world that we live in. So that does not necessarily mean not using, humans, not using a workforce. At Sarwa, we have both. We rely on technology to cut costs, but we also have an amazing support team that's always there, and you have, back-end engineers and so on. But this is one thing, is about how do you reduce operational risk? How do you ensure your customers have access to your platform whenever they need to? How do you have healthy unit economics? And that, you do by really analyzing your cash flow, by optimizing costs, by really working on very solid projections under different scenarios, which again is something that we had to do to be able to make sure that we have enough to survive whatever, the pandemic threw at us. And ultimately, it's again about your customer lifetime value to the customer acquisition cost, right? So LTV to CAC, keeping it reasonable, because what we've been seeing recently in the world, but that's again my personal opinion at now, but there is some research to back it up, is that a lot of startups that gone through very strong and fast growth, they ultimately will have to keep funding in order to continue that growth. So looking into healthy models becomes a very important thing to have in place, and ultimately partnerships to close and bridge any gaps in terms of the business model itself.
Yes, and really I can sort of see there, as you say, it's got to be that sense of a calculated risk with an element of, I suppose, conservatism in there as well. It's the thought process, planning out what's going on. We have a question here from Wayne Patrick here in the UAE and says, what part does business awareness regarding investment on smaller capital play in increasing Sarwa's customer base? So it's great we're getting some questions in here from our audience. Please feel free to deliver some more questions. So back to that one, Nadine, there in terms of building the awareness regarding investment on smaller capital.
So if I understood correctly, it's about market growth and growing your market share. Did I get that correctly?
But on your market share, but I mean, how are you building awareness for people to actually look at this and think this is a good idea to come on to Sarwa and go from there?
So again, I'm the chief marketing officer, so my job is growth and creating awareness for a brand. And again, going back to the fact that we started 3 years ago, it was about being very conscious of how do you balance budgets with growth. Ultimately, it was a lot of A/B testing, very different channels, using any channels that are unpaid in the beginning of the business growth. So when you look into business, you will have different phases of growth. And the initial phase is, as much as you can, at least that's what we've done, is to look into the unpaid channels, whether it's the social media channels that we have, so the owned channels, the website, driving traffic to the website organically through search engine optimization. looking into, media presence. So talking to the press, telling them about our story because we had a valid story to tell. We wanted to change something that can help people grow their wealth. Looking again into backlinks, so partnering with other startups to, send traffic back and forth, using everything that you can in terms of the unpaid before you go into performance marketing and the paid. We needed to build trust because we were a startup and we were, we tried to tell people to give us their life savings. So it was about building trust in a completely new product, in a completely new vertical when we launched, because Sarwa was the first to bring this service to the region. And ultimately, it's a new company. So it was both. And how do you manage that? Getting the right stakeholders, being regulated as a financial institution, and really getting the story across.
And I think getting all that in place took a lot of work too. And again, when you look back in terms of the research and the effort and the energy that you put in place establishing Sarwa, what do you think, where did you see was needed? Or was it partly learning as you go and then, really realizing what you needed to do to make sure it was successful and to continue that now and in the years to come?
I think it's always about the growth mindset and it's always about A/B testing. We also were really very careful with the hiring. Whenever we hired a new team member, we wanted to make sure that they believed in what we're trying to do. And I can tell you now that every single Sarwa team member feels ownership over the business that we have. So it was about also a very thorough hiring process where, the initial team, the founding team was all involved in anyone that was joining at the beginning and more or less still today, because the reality is you are as good as your employees. And we need to make sure that there's a cultural fit, that everyone can work together and everyone has the cultural values that we have in place, which is growth mindset, positivity, ownership, transparency, all of these things that we believe in as a founding team. The whole Sarwa team has it. So it was extremely important for us to get that right.
Indeed, and to get the right people in place. Now I have a message in here, a question from Smita from Bahrain. And I'm not sure. Let's see where this one goes. You might have to clarify it, Smita. But is there a minimum cap on the seed capital required to invest in your firm? So basically, are you looking for more example, or is it, do we want to put, investments within the platform? So I think you told us in terms of the platform that minimum was $500 coming down. But so here's Smita wondering, looking for seed capital to invest in your firm.
So I believe she's asking if she can come in as an investor and.
Well, it sounds like that, doesn't it? Not a bad offer to be getting on live on the chat, huh?
We can do that for sure.
So maybe Smita needs to get in touch with you directly on that one, huh? But coming back to the platform in terms of what's the minimum there? You were saying it was like 500. Maybe you're going to bring it down lower here. And again, how do people, get started there? What can they do, I suppose, to test the waters in terms of, starting investment, whereby, should they have X amount of money that they, can afford to lose if need be, but, there's always a risk attached. What would you advise people to do if they're coming onto the platform?
Now, of course, I'm going to say the disclaimer that ultimately any investment has risk associated to it. And the reality is nothing that I can say would be considered as, personal advice, because personal financial situation of everyone is very different. But what I can tell you, we always emphasize the importance of starting first with an emergency fund, especially after everything we've been through during the pandemic. So it's important to have, some savings put aside, an emergency fund that also can get to returns. So let's say put them in a very low risk portfolio that can generate some income, but at least it's not high risk. And that should cover, let's say, depending on your personal situation, whether you're single, you have a family, but it should cover anywhere between 3 to 6 to 9 months of expenses. Beyond that, as now we always say that if you have savings, invest it, grow it, let your money work for you. Put it in the market and put it in a portfolio that, again, reflects your risk appetite and your financial goals, and grow it long term. So we are big believers in passive investing. Now, do you want to trade because you have certain companies you strongly believe in and you think they have, let's say, impact on the economy, on the environment, so on and so forth? Yes, do that, but do that with an amount you're willing to lose, because active trading is high risk, right? So we usually recommend anywhere between 5 to maximum 10% of your wealth to be in active trading, and the bulk of your wealth should go into passive long-term investment.
Now, talk to me a little bit. You've had a very well-established career in the corporate world too. And when you look back on that career, I mean, how has that, and perhaps people you've worked with in the past, really, shaped your future as an entrepreneur, so to speak?
Yeah, I've had a very, I would say, multidisciplinary career, right? So I shifted between careers because it made sense to me at the time. But I also come from an entrepreneur family. So my dad is a business owner. He's ingrained in us the culture of owning your own business, being productive, giving back to the economy. I've always worked. Now, I started working when I was 14. And then even when I was in university, I was working at the university. Then I don't think I've ever stopped working ever since. So it's been a career of different skills learning, I would say, between managing my own businesses, working for big corporates, helping startups establish themselves, working for government entities. And I think every single stop has taught me so much. And it's just about really using these skills to grow.
It's so true, actually. It is. We all learn from any job we've ever had in the past. I think it informs us along the way. But at the moment, when we look at, how work and the nature of work, it's about mobility, it's about flexibility, it's about agility. What measures do you think that businesses need to take, to make sure that they can move this in terms of, the growth in the labor market and really sustaining growth, so to speak? What do they need to do?
When Corona happened, Sarwa, we saw a great growth. The reality is, some people unfortunately lost their jobs, but a lot of people that kept their jobs were saving a lot of money. So there was a lot of influx into Sarwa in terms of funds. To us, from a company perspective, it was business as usual. We had the support team that was already digital, the onboarding that was already digital, everything. Sarwa was born in the cloud. And I realized how lucky we were as a tech company to be, during that time, a tech company. Ever since, we continued being a remote-first company. We realized that the team is working beautifully together. They're very efficient. We're delivering milestone after milestone, if not over-delivering. So productivity was higher. Morales were higher because you're saving on so much, whether it's the small commute time, whether it's, balancing also life and work if you have your cutoff time. So we gave our team the option to go back to the office or not. And now what we do, because they do miss each other, so now what we do is 2 days a week in the office, 3 days that's remote. And then that depends on the teams, but at least my team, that's what we're doing right now.
Yeah, and I think that is so important to give people that choice too, because I think we've seen how people can work well from home, that they can get the job done. And I do think it's going to be a whole new world when we get back out there. But just finally, before we go, when we look at, technology, it really, I think we're hearing, around the world, it is going to be the key factor in terms of economic recovery. Again, digital services not available to everybody. This is a very big region. It's not created equally. What would you say that governments and that, the corporate investors, what can people do to make sure that we can move this forward?
So like you said, technology has been helping a lot, whether it's, digital wealth, e-learning, schools being able to adapt to being distant, businesses and so on and so forth. But the reality is there are gaps also in terms of access. Even though you do have high mobile penetration, not everyone has access to the right tools or know how to use the tools. So I believe it's extremely important that we address that and we ensure that everyone has access to the right tools while also having the skills to use them. So what can we do? There are many examples around the world that government have initiated, but you need to just work on targeting the excluded segments. And how do you do that? There could be, initiatives to get whether, the technology platforms across to these people, whether the iPads, phones, anything that you need, as a government initiative potentially, but also do the training behind it. Now, we've seen this in Uruguay, we've seen this in Mexico, we've seen this in different parts of the world where the government came in and made sure that specifically for education, kids have access to these tools to be able to continue. That's one example. Another thing that they do very, very well here is the dialogue, the continuous dialogue between the private and the public sector, and to make sure that there is a link between what the market needs, what's being done, how can we support it. Like I said in the beginning, this top-down approach helps whenever you have a young ecosystem, because you do need that. You need to make sure conversation is continuing between the private and the public sector, whether you create, an office for that or a specific team for that. And another thing that we see with technology a lot and people questioning that is data protection, right? So it's about open data, open APIs, which are great in many ways, but how do regulators ensure this balance between protecting clients, not inhibiting innovation? And again, I think this region is doing it quite well, and we've seen this in the UAE.
And so there's great opportunities out there, but a lot to be done. We had many more questions in from our audience, and forgive me not being able to get to them, looking at, regulation, looking at crypto, looking at all the great things that are going on out there, but we do have to wrap it up. So Nadine Mezher, the co-founder and CMO from Sarwa, thank you so much for being with us.
Thank you so much, Edna. This was a pleasure. Thank you.
And some great information there in terms of what's going on in the accessible investment banking, so to speak. So have a look at that, Sarwa in the UAE. Have a look at that online and see what you can do. It might be something of great interest. That's it for the moment. Stay with ABLF. We will be right back.